Hello, everyone, and welcome back to V2U Research, where we help Australian investors make sense of the market, not just the headlines, but the signals underneath them. Let's take a look at how the ASX finished today and what it means for the days ahead. The S&P ASX200 closed today at 8,067.4, edging down just 2.7 points, or 0.03%. In practical terms, this was a neutral session, and importantly, not a sign of weakness. After yesterday's strong rally, today's price action looks more like the market catching its breath. On a weekly basis, the ASX200 remains range-bound as investors continue to weigh global economic data against local sector performance. Markets don't move in straight lines, and sessions like this often reflect indecision rather than direction, something we pay close attention to at V2U Research. From a technical perspective, the overall market structure remains constructive. The ASX200 continues to hold comfortably above key support around 8,675.6, a level that has been tested several times this month and has so far held firm. This tells us buyers are still active on pullbacks. On the upside, resistance remains near 8,969.5, an area where rallies have previously stalled. Until the index breaks decisively above this zone, consolidation remains the most likely scenario. RSI 1453.21, indicating neutral momentum, trading range 8,675.6, 8,969.5. At V2U Research, we see these conditions as a reminder that patience and preparation matter more than prediction. While the index finished flat, there were clear differences at the sector level. Information technology rose 2.14%. Continuing to attract interest as global tech sentiment improves. Next DC Limited and WiseTech Global were among the standouts. Healthcare declined 1.78%, with CSL Limited contributing to the weakness. This highlights how heavyweight stocks can still influence index performance even when broader sentiment is steady. This type of divergence is exactly why sector rotation and stock selection remain crucial. At the individual stock level, volatility was very much present. Silex Systems Limited gained 8.38%, and DroneShield Limited advanced 7.30%. On the downside, Steadfast Group Limited fell 9.46%, and Insurance Australia Group Limited declined 6.19%. Moves like these reinforce the importance of having a clear strategy and risk framework, especially in a consolidating market. Looking ahead, global attention is firmly on U.S. non-farm payrolls and the January unemployment rate. These figures will be closely analyzed for clues around labor market tightness, wage pressures, and the future path of U.S. Fed policy. Closer to home, investors will be watching Australia's home loans month-on-month data, with interest rates still elevated. This release could provide insight into underlying housing demand and influence sentiment toward property, banking, and housing finance stocks. At V2U Research Pty Limited, our focus is on helping investors navigate exactly these types of markets, where headlines are quiet but opportunities still exist beneath the surface. Rather than chasing noise, we emphasize market structure and risk control, sector and stock-specific analysis, and clear, disciplined decision-making. Because long-term success in the market isn't about reacting to every move. It's about understanding context and managing risk. If you found today's ASX market wrap helpful, please like the video, subscribe to the V2U Research channel, and turn on notifications. Feel free to share your stock watch list in the comments and let us know which ASX stocks you're tracking this week. Thank you for watching V2U Research. Trade responsibly, manage your risk carefully, and we'll see you in the next market update.